Let's have a convo about a topic that a lot of people are interested in, but very few take the first step when it comes to actually doing it. So I'm talking about how to make money flipping houses with no cash and poor credit. So if you are in that situation, let's say you have poor credit, you have no money, but you would like to learn how to make money flipping houses, this is the video for you. I want you to stick around till the end. You're going to love it, I guarantee it.
One in a million, one in a million, one in a million. You know they're coming up to me, cause I'm just the kind of flower that's stinging from the beat, but the rhythm's getting higher. Go, 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 go. One in a million, one in a million, one in a million, one in a million, one in a million.
Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you're all doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to explain to you how to make money flipping houses with no cash and poor credit. Let me first give you an overview. Let me make one thing very clear. Learning how to flip houses with no money and poor credit is entirely possible. Really, people are doing it every day. We have a lot of clients in our business who started with no money and today they are millionaires. Okay, so it is totally possible. But first thing first, what is house flipping? So house flipping is the process of a real estate investor purchasing a property, making repairs or upgrades, and selling it for a profit. So this investing strategy is intended for an investor to sell a property as fast as possible instead of using the property to live in it, right? So if you're a house flipper, what you want is you want to get a property, rehab it, renovate it, just put it to a good standard and sell it real fast. See, flip it. You want to flip, okay? And the main cost of flipping a house will include renovation expenses, insurance, utilities, and marketing. And on purchase, the condition of the house will determine the scope of work necessary to rehab the house and whether or not you will need to hire a contractor to complete bigger projects. Now, once the rehab is completed, you will need to spend time and money on marketing to attract potential buyers, and it may be worth hiring a realtor to help get your property off the market unless you have a very extensive network of real estate professionals already in place. So this is really important. Now, where do you find houses to flip? As you research the potential locations, it's important to focus on a few specific geographies. I'll talk about the geographies later on, but you want to take time to look into the right market for flipping houses. So you want to find an up-and-coming area where property prices are low enough to make the rehab cost worth it. You want to look for growing areas where employment is increasing and a few development projects are in the works, right? You want to look for places where you have younger families because they are the ones who actually tend to spend. You want to look for geographies that are attractive, not only from an economic perspective, but also in terms of social perspective. You want to have the Board of Education is kind of cool in those states. So in those geographies, so you have a constellation of factors to look into before flipping a house in a specific location. Let me talk to you about private lenders. So the thing is, if you don't have money, but you are trying to flip houses, the money must come from somewhere, right? So you can go to private lenders, for example. More often than not, private lenders will serve as an investor's greatest source of funding. After all, private money lenders are essentially banks without the endless hoops to jump through most traditional lenders have become synonymous with. Okay, having said that, private lenders are anyone with a few extra $1,000 in their pocket, a desire to invest, and a propensity to have their ears bent. In other words, they love taking risk. Okay, and perhaps more importantly, those lenders, they're not associated with any financial institution or a government-backed agency such as Fannie Mae or Freddie Mac. This is an important distinction to make because it means they can make their own rules. Okay, this is important. So they can set their own parameters. So private lenders typically come at a steep price though. They'll ask you for a double digit, for example. They can actually ask you for an ROI of 10% or 12% or 15%. Okay. And the thing here is that you need to understand, as you actually evolve in the industry, you're going to have to start building your network. Okay. Now, when you work with a private money lender, you can get the cash real fast. Again, you don't have to wait for 2 weeks or 3 weeks, whatever the length of time it takes a traditional bank or credit union, for that matter, to disburse the funds. Private lenders have the cash available. They can disburse it real fast. This is why I'm just telling you, at this point, you want to start constituting or at least you want to associate yourself with private lenders in your area. They do have industry events. You can go to conferences. You can go to you can join certain clubs. You can actually ask the Chamber of Commerce in your city so that you can actually meet private lenders. This is important. You just want to have deep pocketed investors. Decision time, folks. I want to ask you right now, do you know of a private lender in your area or in the area in which you want to start flipping houses? Talk to me about that. If you don't have a private lender, what are the alternative sources of funding that you will be looking for? Because remember, you don't have money yourself and you have poor credit. So you need to rely on a third party to finance your house flipping project. So who's going to do it? Besides private lenders, there is another category of investors on whom you can depend when it comes to finding the sources, the liquidity sources to actually fund your house flipping project. So those are hard money lenders. It's just another category. So hard money lenders are lending companies that offer specialized short-term real estate backed loans. So private lenders are individuals most of the time, individual investors. Hard money lenders are institutions. They are companies, not institutions. They are companies. And they just specialize in short-term real estate-backed loans. Unlike the private money counterparts, they are affiliated with a company specializing in lending. However, hard money lenders will typically offer shorter loan terms to avoid confusion with traditional lending institutions. So whereas transactional lenders will offer loans up to 15 and let's say 30 years, hard money lenders tend to stick with a 6-month to 2-year window. Think about that. So you better really sell the house within that window if you really want to make profit and repay the hard money lender. Okay. So other than their affiliation with an actual company, hard money lenders will operate a lot like private money lenders. Not only are their lending guidelines a lot looser than traditional institutions, but their rates are also slightly higher. Hard money lenders will usually ask for about 11 to 15% and about 5 points additional upfront percentage fees based on the loan amount. However, it is worth noting that there are no universal hard money lender guidelines. Each will come complete with a different set of criteria. So this is why, again, as I was telling you earlier, you got to think about start building up your network of private lenders, but also hard money lenders. Okay. Now there is an interesting rule in house flipping. That's the 70%. So home flippers have a straightforward business model. They buy a house for a low price, renovate it, and then resell it. And they want to resell it for a greater price, right? So the purpose of a flipper is to buy low and sell high in order to maximize his or her earnings. So when flippers are looking at real estate listings, the 70% rule can come in handy. Essentially, it states that investors should pay no more than 70% of a property's after repair value minus the cost of the repairs required to refurbish it. Let me actually say it again. Essentially, it states that investors should pay no more than 70% of a property's after repair value minus the cost of the repairs required to refurbish it. We're just going to put this on the screen for you. So after repair value times 70% minus estimated repair cost should be equal to the maximum buying price. So we're going to put this on the screen so everybody has a clear idea of what we're talking about. You want to try also wholesaling. So if you have, let's say you have poor credit and you have no money and you're trying to flip houses, you want to try wholesaling. Now, wholesaling houses can enable investors to make a lot of cash in a short amount of time, making it a great vehicle for flipping houses. So the process is very simple. It involves finding properties for sale, getting them under contract, and then assigning the contract to a new buyer. Okay, so it works very, very simply. Now, wholesalers make money based on a percentage of the final sale, which is usually between 5 and 10%. But again, if you do 2 or 3 or 4 of these transactions in a month, it really quickly adds up. And the 5 and 10% I'm talking about, those are tens of thousands of dollars. Okay, so the wholesale process does not actually involve purchasing properties, making it a great opportunity to get started in real estate without access to funding. Okay, this is really important. And so now there is one thing to keep in mind as you consider this route though. Wholesale properties will not fall from the sky, and neither are buyers, right? So while this is a highly lucrative opportunity, and a lot of folks are interested in it, investors will need to you need to take on an active role to succeed. In other words, this is not a passive investment strategy at all. You got to be really, really active. You can't sleep. You can sleep, but you have to constantly think about the best way to actually get this done, because this requires keeping a close eye on the market, networking with potential buyers, and learning how to negotiate contracts. Okay. However, by putting in the necessary effort to succeed as a wholesaler, as an investor, you will be well on your way to securing your first rehab property. It's all about the commitment, the time and energy you put in, right? And as a bonus, the skills and connections that you need for wholesaling will certainly come in handy, because as an investor, as you actually evolve into your house flipping project, you will learn, you would see that you will get better and better and better. I'm just telling you, we have clients for our, in our own business, we have clients who are multimillionaire today, and after flipping houses, and they started not long ago. They started 5 years ago, and they had nothing. They had no cash, and they had poor credit. So it is totally possible if you really want to make it happen. Another strategy you can try, boss, if you're there and you have poor credit and you have no cash, you can try something called group flipping. So as the name implies, you need to partner with house flipping investors. In other words, let's say you spot a property, and the property is 1 million, and it's just way above your paycheck or whatever, your budget or your whatever. You can partner with other investors to buy the property. Okay, this is kind of cool. And because both private and hard money lenders are a great way for investors to flip houses with no money out of their own pockets, but they are not the only ways. One additional way to flip a house without using your own money is to partner with house flipping investors. So one thing we have seen in our research is that it becomes entirely possible that teaming up with someone who is already flipping houses can be your next best move, right? And there is no reason why they couldn't provide you with the funding you need. Now, having said that, a partner with money is just as good as a private lender or hard money lender. So in other words, they'll be asking for a return on investment, but even better, they are bringing to the table an additional set of skills which you will need anyway. Okay, so provided the right alliances are made, there's no reason why you cannot partner with the right person who in return can fund the deal, as long as you bring value to the table. This is really important because you don't have cash. So the question is, what are you bringing to the equation? If you're not bringing cash or not bringing your good credit score, then what are you bringing? It's also worth noting that if you are not bringing the funds to the partnership, you better bring a lot of value elsewhere, and either in the renovation process or in things like building licenses, permits, geographical research, all that kind of stuff. Perhaps you actually know of a deal, or maybe you have the right contacts, right? So whatever the case may be, as a partner, you need to carry your own weight. At the very least, partnering with investors who already have money is a great way to start investing, and also a great way to start investing without having the proper credit score. So you're not reaching out to a bank. You're not actually, spending time being frustrated because the bank is rejecting your application, you can just get things done on your own. Totally fantastic. I'll be right back right after this. Don't go anywhere.
Finest, yo, mystic killer, and call me señorita. Like that got me dreaming. My legs up on the ceiling. Oh yeah. I know when he come, he ain't never gonna leave me. Hit it the night run, and that's the way I wanna be. So don't think I'm the one to won't ever be enough.
Welcome back, folks, to another session of the Awesome Sweetie Kiwi Show. We are still having a conversation today about how to make money flipping houses with no money. And I want to give you another hack that will really help you. That's called leverage. So with leverage, you have two ways actually to play the game here. You have home equity and you have crowdfunding. So home equity knows what? Home equity means what? You can actually use the equity built up in one property to purchase another. So homeowners with value in their current homes can utilize a few options to get access to cash. So the first way to do this is through a cash out refinance. So this involves redoing your existing mortgage and pocketing the difference between the two loans. Okay. Now there are no restrictions on what homeowners can do with this capital, meaning it could be used for the down payment on a fix and flip investment property, right? And so homeowners can also look into a home equity line of credit to purchase a rehab property. And a HELOC operates similar to a credit card, allowing investors to actually borrow against their equity and make payments every month. Now, this loan will provide investors with a lump sum, offering a great start to a flipping business. Okay, so a house flipping business. And the best part about this is that the interest on a HELOC can be tax deductible in some cases. What about crowdfunding? Now, crowdfunding is another way to secure a loan for your house flipping deal. So crowdfunding is actually a financing strategy that relies on multiple investors who contribute a portion of your total loan. You can search online to find various sites designed to specifically connect house flippers and crowdfunders to streamline the process. So really, when you think about it, this is a great opportunity for house flippers who are unable to secure mortgages from other lending institutions, because especially if you have a bad credit score, you could find it very hard to actually get the loan that you need, even though you have the right deal, you have the right location, and you're just ready to get the funds to get started. So this is really important, okay? And you have to understand the whole thing here. You want to connect, you really want to connect, and there is a great opportunity for house flippers, because there is actually there is an entire community out there who is really ready to support you. The last strategy I want to talk to you about is called in flipping. At least we call it in flipping. So you have two ways here. You actually have three ways. You have seller financing. So if you want to flip a house with no money, you can do seller financing. So investors can either search for properties that advertise seller financing or pitch the idea to interested sellers after finding a home to flip. So instead of going through a traditional lender, seller financing allows you to work directly with the former property owners. So this is an attractive choice to flip houses because investors have more flexibility when negotiating the loan terms. So this can lead to a potentially small down payment, favorable payment schedule, and even simpler approval terms. So to secure a property using seller financing, investors need to know what to expect, right? So just like with private money lenders, investors need to instill a sense of confidence in potential sellers. What about an option to buy? Now, options to buy or lease option is when investors agree to purchase a property after leasing it. It works like this. So renters occupy a space and then agree to purchase the home at the end of the lease agreement. So the purchase price will be determined when the original contract is signed, and in most cases, rent payments will act as credits towards the final price. And so there is a great avenue for those wondering how to flip a house with no money down, because lease option homes do not typically require any upfront payments. This is really good, and so this is kind of cool. And you also have the live-in flip. So if you want to dive straight into real estate flipping, you could buy a property as your primary residence and renovate it while you live there. So this arrangement can open up numerous financing opportunities with beneficial loan terms and minimal down payments. Okay, so for example, home buyers can utilize the VA loan or USDA loan if they meet other requirements in terms of repair costs. By working on the home yourself, you can save money on labor. Furthermore, you can renovate in sections, allowing yourself to extend the timeline without hurting your profits. And again, after all, you will be living there for a long time. So this is really important. Now, you have to note that many home buyer programs will require you to live in the property for at least 1 year before moving out. 1 year. Okay, so this is what it is. You got to think about what really works for you and works for you and works for your house flipping business. Thank you so much, folks, for your attention to this conversation. I was just talking to you about how to make money flipping houses with no money and poor credit. So I gave you an overview. I talked about private lenders, hard money lenders, wholesaling, group flipping, leverage, and in flipping. Thank you so much. I'll speak to you another time. But until then, remember, stay marvelous.